Are you looking out for a multi-bagger stock which is priced less than 100 rupees? Well, a Rakesh Jhunjhunwala backed multi-bagger stock which is below 100 rupees is actually being seen as a good bet after the strong Q2 show or the strong Q2 results. Now, scheduled commercial bank, Karur Vysya Bank is what we are talking about, which is a small cap stock and trades below 100 rupees currently. Now, the stock is just a couple of rupees away from hitting its 52-week high. We do see that on Tuesday, Karur Vysya Bank actually had witnessed strong buying sentiment, and that was despite the broader markets being quite bearish. Now, this is due to the strong set of numbers the bank had garnered in the second quarter of financial year. Also, when you talk about the stock has really nearly doubled this year and even has emerged as a multi-bagger stock as well. Now, so far this year, the stock has skyrocketed by 100% on the Lal Street. The stock was nearly 46 rupees when you talk about at the beginning of this year in January. However, in a year span, when you talk about 1 year period, the stock has actually risen over 82% from the level of 50 rupees that was seen on October 25th in 2021. Now, what you can see is in that last 1 year time span, over 80% of returns have already been seen on the stock. Now, remember, late Rakesh Jhunjhunwala is one of the major investors in Karur Vysya Bank, and as per trendline data, as of October 25th of 2022, Rakesh Jhunjhunwala's holding in Karur Vysya Bank is around 333 crore rupees. Remember that late Rakesh Jhunjhunwala's portfolio has a 4.5% stake in this bank and has also been maintaining this stake ever since June quarter of 2020. Now, remember when we talk about the quarter 2 earnings, let's look at the fine print there. The Tamil Nadu-based bank had garnered a net profit of 250 crores in Q2 of FY23, rising by 52% on a year-on-year basis, while the net interest income stood at 821 crore rupees, and that's up by 21% on a Y-on-Y basis as well. Now, when you talk about the net interest margin, that has improved to 4.07% in Q2 of FY23. Now, during the quarter, the bank's credit portfolio also surged by 15% year-on-year, taking its advances to 61,846 crore rupees. Also, it said that credit offtake continues to improve both on a year-on-year basis and Q-on-Q terms as well, that's sequentially, and on a year-on-year basis as well. When we talk about the kind of aiding of growth it has done of the advances portfolio too. Now, the lender's dual loan portfolio has risen by about 15% year-on-year to over 15,460 crore rupees. The asset quality has also improved, with the gross NPA coming at 3.97% in Q2 FY23 versus 7.38% growth that we had seen in Q2 of FY22. And, when you talk about sequential basis, it was a 5.96% in Q1 of FY23. So, you can see a substantial improvement both quarterly, sequentially, and on a Y-on-Y basis as well. Now, the key positives for this quarter for this company were the moderating slippages, the pickup in the credit growth, which is a many-year high as well, multi-year high. There were better margins that was reported, the strong liquidity and capitalization as well, with the credit growth expected to be in the mid-teens, and also moderating credit costs, and earnings are expected to be strong even going forward. So, should you really buy Karur Vysya Bank after the Q2 earnings? Well, analysts at Emkay Global in their report have said, and I quote, that bank's business transformation journey, which started during erstwhile MD's tenure, had been further accelerated by the current management engaging in lateral hiring from large private banks for strengthening the liability and asset business as well. Unquote. Now, on the back of its impressive Q2 numbers, many experts have actually given a buy rating on the stock, including brokerage houses, with a target price that ranges between 115 rupees to 125 rupees ahead. So, what you're waiting for? That's a multi-bagger stock that could be in the making, but don't forget to speak to your own financial advisor before taking your pick in this stock.
If you like the video, do like, comment, share and subscribe.